Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SenseTime Group Inc. Interim Report. SenseTime Group Inc. market capitalization of $85 billion is significantly larger than the average industry peer of roughly $5 billion. This shows that SenseTime Group Inc. holds a significant advantage in their industry. SenseTime Group Inc. trades at a higher price-to-book ratio of 3 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The company maintains a moderate leverage profile, with liabilities making up 32% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The share count has increased, while revenue and shareholder equity are declining. This indicates that management has not yet proven the business model is sustainable. The investment case is highly unfavorable. The income statement shows that the company revenue have been declining annually even though operating income have been improving. This shows that management have been able to reduce cost. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. SenseTime Group Inc. offers a diverse range of businesses and services across various industries. The company provides artificial intelligence software platforms for enterprise customers, smart city management solutions, IoT, devices with perceptual intelligence and content enhancement capabilities, metaverse-enabling technology platform, SenseMars, diagnostic and treatment assistance solution, SenseCare Smart Health Platform, automotive application platform, SenseAuto Platform, AI education system, SenseTime Education, AI as a Services, artificial intelligence data center services software, development services, information transportation software and information services, software embedded hardware and related services, private equity investments, computer vision technology development, AI technology research and development. These businesses and services cater to various sectors, including enterprise customers, smart cities, healthcare, automotive, education, and more. Der Aktienkurs von SenseTime ist in den letzten 12 Monaten plus 46,98% gestiegen. Die Hauptgrund für diesen Anstieg sind die Einführung von SenseNova 5 im April 2024/2025 führt zu einem starken Anstieg des Aktienkurses, das Unternehmen behauptet, das sein neues Groß-Sprachmodell, LLM, mit dem GPT-4 Turbomodell von OpenAI vergleichbar sei. Die Ankündigung der AI Plus Richtlinien des chinesischen Staatsrats im August/September 2025 führt zu höheren Ausgaben der Nutzer für KI und einem Wachstum des generativen KI-Geschäfts von SenseTime. New generative KI Projekterfolg im September 2025 führten dazu, das Goldman Sachs Diskursil für SenseTime erneut erhöht. Die Kapitalerhöhung von 31 Milliarden HKD, etwa 358 million in USD, im Dezember 2025, die KI-Infrastruktur und die Entwicklung der generativen KI zu beschleunigen, weckt das Interesse und den Optimismus der Investoren. Die potenzielle Aufnahme von SenseTime in einen globalen Index, im Februar 2026, trägt ebenfalls zur positiven Stimmung bei. The primary drivers of revenue growth or decline are multifaceted and varied across different regions, segments, and products. On the growth side, generative AI has been a significant contributor, with sustained high growth and increased contribution to group revenue. Computer vision also regained momentum after industry-wide adjustments. The X-Businesses segment unlocked operational vitality and capital market appeal through strategic restructuring. Geographically, mainland China and Southeast Asia saw substantial revenue increases of 53.2% and 46.9%, respectively. Other regions experienced even higher growth rates, with a 69.1% increase in revenue. In contrast, Northeast Asia was the primary driver of revenue decline, with a significant decrease of 72.3%. This was largely due to smart device customers shifting cooperation from R&D services to long-term maintenance services. Overall, the company's revenue growth and decline are driven by a combination of technological advancements, strategic restructuring, geographic expansion, and shifts in customer preferences. Net income experienced a fluctuation over the period, initially increasing before decreasing by 50% period over period. However, it further decreased by 14.8%. In contrast, profit margins showed mixed results. While they were enhanced in the computer vision business, the overall gross margin declined from 44.1% to 38.5% due to increased hardware and AIDC-related costs resulting from customer demand in 2025. The company's financial records indicate a consistent trend of negative operating cash flow. In 2024 and 2025, the net cash used in operating activities was a significant negative amount, totaling 3,523.8 million RMB and 639.5 million RMB respectively. This suggests that the company is not generating sufficient revenue to cover its operational expenses, resulting in a net outflow of cash from operations. The company's debt level has seen a significant increase over the past period. Total borrowings rose from RMB 5,921.8 million to RMB 8,172.9 million, while total bank borrowings also increased by approximately RMB 0.25 billion. This substantial rise in debt is accompanied by an increase in interest expenses, which grew by 12% and reached RMB 6251. The rising debt level and corresponding interest expenses indicate a notable shift in the company's financial situation. Management is outlining a bold strategy to capitalize on emerging market opportunities. The company's 1+X approach aims to maintain leadership in computer vision while expanding into generative AI, driving growth and solidifying its top position in the industry. Key priorities include rapid revenue expansion, operating efficiency improvements, and cost reduction. With strong long-term growth prospects driven by increasing demand for its products and services, management is poised to invest in strategic initiatives that enhance SenseCore's scale and support further development of generative AI. The company's financial strategy has been focused on retaining earnings rather than distributing them to shareholders. Specifically, the company has chosen not to pay dividends or engage in share buybacks, indicating a preference for investing in its own growth and development over rewarding investors through cash distributions. That concludes the financial summary for SenseTime Group Inc. Feel free to comment below, and I will be happy to answer them when possible.